We are back with another powerful packed weekend this Saturday where we will explore three topics. The first one is how can investors stay ahead of the curve with multi asset investing? We have seen a lot of market volatility in the last 2 months. The India VIX has doubled since the end of April. FIs have also pulled out a lot of money. So, should you wait or should you jump in before it's too late? The second is reviewing the IT sector, where we will talk about the business performance of top IT companies in India, the growth outlook for IT sector, and understanding whether it is the right time to invest in this sector. The third is banking on growth, where we will look at the opportunity in the banking sector, business performance of top banks, and understanding whether it is the right time to invest in this sector. So if you're interested in any of these three, click on the link below.
Most investors devote more time to think about demand than supply. But demand is the most difficult to forecast than supply. And profitability is driven by a favorable supply side than by high rates of demand growth. What happens in a typical industry cycle can be defined in four stages. Stage 1. A favorable supply side causes the business returns for existing players to increase above the cost of capital. As a result, the share price outperforms the market. Stage 2. Attracted by the high returns both in the business and in the markets, new entrants enter the market and investors become more optimistic than even promoters themselves. Stage 3. Rising competition results in a decline in the business performance and the business returns go below the cost of capital. Stage 4. The industry goes through a consolidation. Some players are bought out and some players exit. And investors are very pessimistic. But this is when you have to be a contrarian. This cycle keeps repeating even if each of them are different in their own way. High demand with no cap on supply leads to diminishing returns both for the business players and the investors. We have seen this multiple times in India. Pharma in 2015 is a very good example. US focused pharma companies were making a lot of money in the early part of the last decade. As a result, the drug shortages were at the peak. Seeing this, a lot of other players put up capacities to cater to US generics drugs demand. What happened was all of this new capacity were commissioned at around the same time. As a result, both the business and the share price peaked in 2015. The down cycle lasted for many years. Towards the end of the down cycle, the price erosion in drugs was almost as high as 10 to 15% in some drugs. We saw this again in 2018 when Reliance launched Jio in the telecom sector. We are seeing it again in paints. Paint companies were making a lot of money for almost 2 decades. Their returns were almost 2x the cost of capital and with high growth. All the paint players were growing faster than most of the FMCG and consumption names. Many have tried to enter the paint industry to grab a piece of this profit pool but have failed. Only recently, a clutch of large players, conglomerates, have entered this space. JSW has recently crossed 2000 crores in paint sales. Astral Paints has launched by buying a smaller player called Gem Paints. Pidilite has launched its own brand. But the big news is Grasim is spending 10,000 crores capex for paints and is putting up almost 40% of the entire paint industry's capacity. If Grasim and Asian Paints do what they are guiding for, these two alone could have 100% of the incremental market share in FY25 and continue to have high market share in the next 2 to 3 years. But grabbing entire incremental market share is very difficult even for a large player like Grasim and Asian Paints. They will have to grab market share from the existing players. The premiumization strategy followed by some of the paint players will be at test. If this reverses, the valuations can contract. Sector has to grow faster for any upside, but something has to give, given the huge money being invested by Grasim. Some players will take a hit on growth, some players might take a hit on ROE. A very interesting case study is playing out in front of us.